very good afternoon. You're watching Your Stocks live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra. Well, it's turning out to be a day where we are seeing some amount of a recovery which has taken place for the markets. We have the Nifty, which is just about lower by around 19 odd points, and the mid-cap index, which is trending with a cut of around 0.2%. Overall, you'd have to say it's a quiet day of trade today. And we do have the advanced decline ratio, which in fact has now surpassed the decline. So if you look at the crisscross between them, there was one which took place midday, but then it's, surpassed the just about going to surpass the declining stocks, as you can see on your screen. Bank of Maharashtra, their Q1 updates, total deposits up around 14% to 3.05 lakh crore, and the other details should show up for you. The gross advances up around 15%, just about lower by around 0.3% currently for that particular counter. But joining us today is independent market expert Shahina Mukadam and Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, to answer all of your queries. Shahina as well as Vaishali, welcome to the show and good to see you all in. Well, let's just start with a quick check, Vaishali, in terms of the technicals of the market before we kick off the show. If you could just give us a sense, considering that there has been a recovery which has taken place intraday.
Hi, good afternoon, everyone. So I guess, yes, market does have the inherent strength. So for intraday purpose, I would say 25,350 acts as a crucial support. If we see Nifty sliding below that, then we can see some more profit booking coming in. But till then, it is a consolidation to a sideways move with 25,350 as support. And likewise, even in Bank Nifty, we will say 56,500 is the support. And that's what we have been witnessing, that yes, market is attempting to bounce from there on. So I guess wait and watch. If levels break, then that could trigger further sell.
Okay, all right. Well, we do have a lot of queries coming our way. So let's start with the first one. A. Subramanian writes to us from Chennai. He holds 35 shares of Cochin Shipyard, which he's bought at around 2,311 odd rupees. So he's sitting on a loss there of around 9,000. He's asking whether to book his losses or to stay invested. Well, Shahina, over to you on this one first.
As we are hearing even today, the order book for these companies in defense, shipyard as well as the other defense companies is very strong, and valuations are expensive. So, if you combine the two, it makes it a bit difficult to give you a short-term call. Short-term, it could, go down by 300, 400 rupees. It could go up by that much. But in terms of longer-term fundamentals are in place. They have done very well in FY25, and going forward also, I believe, given the order book position of more than 22,000 crores as of now, I'm not even factoring in what they're getting. Valuations short-term are expensive, but if you go down to FY27, it's about 35 times P and a price to book of 7 times, which is not too stretched for a company of the size and quality of Cochin. So I would say it's a hold.
Okay, what about you, Vaishali, in this?
So I would say, well, there is no damage to the trend right now. The near-term support lies at 2,000. So as long as 2,000 level is held on, I think one can expect a bounce coming in. Because today what we witnessed is that these stocks are in a new round of momentum. So if the momentum continues and sustains, then we are back on track, and perhaps we can look at a target of 2,400 in times to come.
Okay, all right. So that's on Cochin Shipyard. That stock has performed well, up around 28%. Any which way in the past 6 odd months. Let's get to another query now. We have S. Jaykumar, who writes to us from Tamil Nadu. He holds 100 shares of Oracle Finance, which he's bought at around 9,079 odd rupees, sitting on a bit of a loss there. And 100 shares of Linde India, which he's bought also at around 6,658. And he wants to know the future prospect of both these investments. So future prospect of both these investments. Vaishali, let's get to you on the technicals first.
So I think first let's talk about OFSS. And I think, it's showing signs of improvement. So I would say near-term support lies at 8,500. And since stocks in all this sector is attempting to do better, this too should do well and look for a target of 9,500. And Linde also, if we talk about it, I think, very well placed. One can add at every decline and look for higher targets of around 7,000, 7,200.
Okay. What about you, Shahina?
Well, these are long-term stable investment companies. I don't think there's too much of trading possibility in them. But if you see both of them, the companies have very strong balance sheets. They are debt-free. They have got high cash generating businesses. Promoters hold about 75% equity stake in both. Uh, but if you see in terms of near-term valuations, they are expensive. At the same time, I would say that both of them have got unique businesses. Like Oracle is doing and likely to do much better because of they are doing very well uh, in the cloud services. I think there is a big growth area. India, that whole, in fact, global is expected to grow about 20%, that whole segment, and Oracle is very well placed over there. In terms of Linde, of course, like oxygen, the industrial gases, they are very strong. They, of course, peak was in the COVID time, 22, 23. They did very well. They have not been able to match those type of revenues even now. But given the fact that they have good order book position, very strong balance sheet, I would say you can continue to hold both.
Okay, all right. Well, now we have Prabhu who writes to us from Chennai. He holds 250 shares of HCC, which is bought at around 36.26. He's asking what to do, whether he should hold or sell at these current levels. Well, just sitting on a bit of a loss. In fact, we've got all of our queries where people are making losses today. But nonetheless, Shahina, over to you on this one. HCC, what would you recommend?
Yeah, see, so the stock has corrected if you see the last couple of weeks. And some from say 38, 39, 40 levels, it's come down to about 30. Now at current levels, I would say that it is a hold. You could look for a bounce to exit. I would say do exit at a bounce because while the stock is a turnaround and it's made very good profits in the fourth quarter of last year, I think a large part of it is in the price. The main issue over here is the balance sheet. The debt is very high, and to meet the huge projects that it's got on hand, dilution is going to be an issue. So I don't know how they're going to do it and fund those projects. So I would say take the bounce, whichever you get, which I think they should, and then you could switch.
Okay, and what about you, Vaishali? The stock has been a complete underperformer. It's down 38% in the past 12 months. From that context, what would you recommend?
Totally agree. Actually, the recent high that we saw was 48 levels. From there on, it has been just sliding. And now we are seeing there is hope of recovery. So I would say 28 should be taken as stop loss because we would still say chartically it is still in the process of higher bottom formation. So as long as 28 levels are held on, I think this stock can bounce to 38. And from there on, we can have a relook because if it moves past 38, then we are back on track to look for targets of 45, 48. So that's the way to look at this stock.
Okay, all right. That's on HCC. We now have Pratibha Raj, who writes to us from Hyderabad. She holds 300 shares of Idea Forge, which he's bought at 952 odd rupees. She wants to know what the long-term view on this particular counter would be. Again, sitting on a loss. First, wanted to understand that are you in specific, Vaishali, looking at a lot of, or are a lot of your clients coming with a lot of the, more losses recently or of late?
Well, yes, Idea Forge has always been a troublemaker in the recent data, whatever we've seen, right from 900 levels. And now it is showing strength. In fact, today also we are seeing some volume pickup and all. So I think hold on. I mean, let's not panic. Keep 550 as a stop loss and at least look for a trading range of 650, 680. And once we see those levels, then I think it's again back on track as I just mentioned. But there are a few stocks. Most of the stocks have really run up in this sector. But there are 2 to 3 stocks which still look promising. One is Zen Technology, one is HAL, and Idea Forge. So these stocks, if the direction goes right, I think you can see further on returns from these stocks.
Okay. What about you, Shahina? Idea
So
Forge?
Idea Forge unfortunately is one stock in defense which I'm not too sure about of investment. There are issues out here. It was listed 2 years back around July 23. Post that, it has never seen those type of levels. Secondly, the promoter has very low holding, about 29%. And the main part is the problem is the order book position. If you see a year back, or I would say 6 months back, the order book was almost about 176 crores. But if you see recently, at least a couple of 2, 3 months back, it has fallen down to 13, 14 crores. And if you see the numbers also, it's making losses in FY25. It made losses versus good profits in the previous year, the year of listing. So I would say it's extremely risky, but it's a defense stock. It's in drones, engineering. So I'm not too sure about this stock. I wouldn't hold it. I would relook at it, keep relooking at it.
Okay, all right. What would be a good level for you to probably enter the stock?
I really don't know because, with the order book position of just about 13, 14 crores, I don't know when it's a good time to enter.
Okay. All right. Well, that's an idea for just about higher by around 5 odd percent just in the past few weeks odd. We'll take a short break, but remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C and Global Lens at 8:30 p.m. Welcome back. You're still tuned into Your Stocks on CNBC TV18. We have with us independent market expert Shahina Mukadam and Vaishali Parekh of Prabhudas Lilladher to answer all of your stock queries this afternoon. Well, before we get to that, just a quick word on the markets. We have the bank nifty, which has recovered quite a bit, so just about higher by around 54 odd points. Nothing to write home about, but nonetheless, it is still a positive momentum that we're seeing for the bank nifty. A couple of paper stocks are doing well. So JK Paper is doing well. It's up around 9 odd percent on huge volumes. Padamji Paper is also seeing some amount of momentum on the upside. So that stock is up around 3 odd percent at this point. But let's continue our focus on specific stocks then. We now have Vaibhav Rathore, who writes to us from Mumbai. He holds 18 shares of Siemens Energy at around 2,782, and he wants to know the potential of the stock for the next 5 years. He also wants to know if he can add more shares going forward. Well, Shahina, it's definitely a breath of fresh air to see a positive stock or positive returns come in today. So what would you recommend on Siemens?
Yeah, so the stock was demerged and relisted. It was listed after breakout from Siemens. Siemens Energy was listed just recently, couple of days back in June. So here, he's making money. So I would say it's better to take some money off the table as of now. While the prospects are very good because they will focus on the energy business. T&D, the order book will be good. They have got a good order book. They have got good growth coming forward. They have got order book of about 15,000 crores, which is about 2 times their revenues for the current year. So everything is okay for the company, but valuations are too expensive. If you look at it, current levels, you have it is about market cap is about 10 times their FY26 estimated turnover and their 30 times EV by EBITDA. So I think these levels, we could see the stock consolidate for some more time, couple of quarters. So relook at it at that point in time.
Okay, all right. Well, let's get to another query now. We have Ravi, who writes to us from Chennai. He holds 250 shares of Biocon, which he's bought at around 123 odd rupees, and that's a good profit that he's making. He wants to know the long-term outlook on the stock. Well, Vaishali, let's get your view in terms of the the technicals of Biocon.
Sure. So Biocon, I think it is a stock for ones who have patience, because this is not the one which really gives you a consistent up move. But seeing the current scenario, I think this is looking very positive, and I think we are looking at a projected target of 410 to 420. So at least for these levels, one should hold on.
Okay. And what about you, Shahina?
Yeah, it's a hold with a stop loss of say something like 340. That was the price at which they raised 4,500 crores just recently. Now, and a large part of this will, of course, Ekta, you're an expert. This will, and you have discussed with the management number of times. I've heard you that this will go to partly repay some of the debt. But at the same time, the debt still fully reflect on reduced cost and interest. It will take a couple of more quarters. So I think FY27 will be the time when we'll actually see the implications of this debt reduction, which is an issue for Biocon as of now. In terms of products, of course, they are doing very well in their biosimilars. They are doing very well in peptides. They have got 5 biosimilars in the US market as of now. Peptides, the GLP-1, they are launched in UK. They have got approvals going forward for the developed markets going forward. New product pipeline is good. So I think in terms of valuation also, it's about 4 times EV by turnover, which for the size and type of Biocon is not expensive. So I would hold, but hold with a stop loss because, as you know, in pharma, things can change overnight. One and two is, I think most of the upside will come only starting FY27.
Okay. Well, Suresh now writes to us from Chennai. He holds 1,000 shares of IRB Infrastructure, which he's bought at 69 rupees. He wants to know the future prospects of this particular stock. He's sitting on a loss there. Vaishali, any target that you would probably have? Do you think that it could probably get back to that 69 level in order to exit?
Well, it's really very hard to tell because right now there is no clarity on the trend. But all I can say is that one can keep a support of 48 levels now that he is so close to the support. Continue holding and let's see how the stock performs because it needs to cross 54 levels technically. 54 and 55 levels, it's a tough resistance band. So once it sustains above that, then I think this can come towards its target of 65, 68. So for now, I would say continue holding and let's wait for a bounce.
Okay. What about you, Shahina? IRB, it's not done too great. It's down around close to 20% in the past 6 months odd. Your recommendation, Shahina?
At current levels, valuations are not too stretched. It's about 12 times EV by EBITDA. It's got 38% market share in the toll, operate and transfer, the TOT business. This market share has actually gone up if you see last 1 year. They've done pretty well in FY25 in their toll business. They have grown by about 23%. They've got good, projects in hand. So I would say hold, hold with stop losses that have been given to you.
Okay, all right. So that's on IRB Infra. Now let's get to Malik, who writes to us from Hyderabad with an investment question. He wants to know some defense stocks he can invest in for the long term. Well, who doesn't, Shahina? So tell us, which one would you recommend at these levels?
Yeah, so we already discussed Cochin. So that would be one on the list, Cochin Shipyard. I personally hold BEL and I'm very positive on the, business going forward. Even today, they got a huge announcement of huge new orders. It's a high-tech business. And in terms of valuation, it is expensive. But these are stocks in defense that you really have got to, keep your faith and hold it for the long term. Similar cases, HAL, which I think, you need to create a portfolio of defense stocks. You have HAL, which I think is another strong, growth company over the long term. They've got good order book position, good products. You can also look at Majgaon Dock, which recently acquired the dock in Colombo. And in terms of performance also, it's doing pretty well. So I think execution, I don't think order book is such a problem over here for all these defense companies. They've got huge order book positions. The issue is whether they will be able to execute and actually give a good return to the investors. So here I think most of these companies which we discussed are likely to do well. So, you could make a portfolio of a combination of a couple of stocks.
Okay. All right. What about you, Vaishali, in this case?
So I do agree with China for a few of the stocks like Cochin and Masgao Docks, etc. But well, I still feel that HAL, as she mentioned too, and I do agree that yes, it has a lot of scope for upside. So HAL is one of the stocks which even now can be bought. The other one, well, even Bharat Dynamics. So that can be done as an SIP strategy because these stocks have really run up. So I would say keep accumulating at every decline because long term still looks very positive.
Okay, all right. So that's on a couple of these defense stocks which have really been in focus. If you look at Paras Defense, for example, it zoomed today. But now we have Suresh, who writes to us from Telangana. He holds 663 shares of ITC, sitting on a loss, as you can see, which he's bought at around 449 odd rupees. He wants to know what to do, whether he should continue to hold or sell at these levels. Shahina, you take this first. ITC.
Yeah, so I also hold ITC for a very, very long time, and I noticed that it is a stock which actually gives you a good return and then consolidates for a long period of time. So I believe now, as of now, it is in its consolidation phase. But with the valuations being attractive, it's about 25 times earnings. The cash business, I mean, their tobacco business is a cash generating business, doing very well for them. At the same time, if you see the numbers, actually were pretty disappointing. If you see the last year, we saw high prices of some of these commodities like food stuffs. Also, you have tobacco prices that were high, which impacted their profitability. So I think it's going to be in a consolidation phase for a couple of more quarters. But if you're a long-term investor, it can be part of your portfolio. You can see the stock going up by 15-20 rupees, go down by 15-20 rupees. So you've got to keep your long-term investment strategy in place.
Okay. What about you, Vaishali?
I do agree. I mean, actually, it is not a stock meant for traders. Only for long-term perspective, continue holding. And along with that, I would suggest also ITC hotels. That also looks positive at this level. I would say accumulate both and enjoy when it moves.
Okay, all right. Well, that's a wrap then, Vaishali as well as Shahina. Thanks very much for joining in and taking us through all of the queries that we have. That's all the time that we have on the show, but do remember to email us your questions and we will address them with our experts. Stay tuned. Closing bell will take you through the last hour of Trade for the Week.